can't be cute when you are trading. By cute, this is what I mean. You have a process, a systematic process that maybe a mentor is giving you. For example, Stacy Buck, he has a process. But you as a beginner trader, you decide, oh, let me get cute and start doing, I'm going to add this here, add this here. Yo, this is a big mistake that I personally used to do, and I had to battle my own ego for me to accept that in order for me to start growing my trading account, I have to model what is working. And Stacy Buck, me, everyone out here who is teaching forex strategies, they're not just coming up with these strategies. These are people who have tested, they have gone through the pain of failure to understand, okay, this works, this does not work. So if you're a beginner trader and you start getting cute, you start adding all these processes and steps to whatever has already been proven to work, that is a formula for disaster. And trust me, I've done it, I know how it feels. So this is the point of this video. I'm going to give you my process, but you have to understand that if you're not consistently making money out of the market, then you don't have the leeway to start acting cute. Do the basic process, follow the basic process every single time, and when a trade setup fits the process, take that trade regardless of whether it's a win or a loss. That is the reality. So let's jump into my trading process, and we will break down a trade that we took on Wednesday. We are looking for a very specific thing. Monday and Tuesday sets the high and the low of the week. So Monday, Tuesday, we are not doing anything. Monday there, Tuesday here. On Wednesday, we come and draw our lines. That is between 8 and 11. And then prior to 8, we want to see the price action and redraw the high and the low. So price extended the low. Yeah, so we redraw the low. And then now we'll go through step by step. Do we have a breakout? Right off the bat, we have a breakout at 8 a.m. Now we are interested in price after 9:20. So from 8 to 9:20, we just let price form the, do its thing to give us the direction of or our bias. Now once you can see it's 9, so we go to the 1 minute time frame to start analyzing the price action. So we redraw again our low and our high. We are interested in price action after 9:20, so yeah, now we can draw the line at 9:20 to differentiate first hour and the rest of the trading session. Now the next step after 9:20 is identifying the most recent high and the most recent low. How do you identify that? Now coming back to the first hour, we are asking ourselves, where did we have our last downtrend? This was the downtrend, and this is where we had our most recent breakout. So this area here. So price broke out, meaning that becomes our most recent low, and this becomes our most recent high, and pins just extend that high. And then after that, price broke out. So if price breaks out, this becomes our most recent high, and this low is our most recent low. So what happens? Price consolidates between these two areas, but price breaks down to the downside, meaning we redraw our most recent low to that area, and our most recent high is that area there. Now of course it is this candle here. Price came out and broke out, and then what happens? Price breaks out to the upside, meaning this becomes our most recent high, and this becomes our most recent low. Alright, once we have our most recent high and our most recent low prior to 920. We want to see a breakout to the upside because we are interested in going in buying. So price pushes, continues to break down. So this means all you have to do is just redraw the high and the low. This becomes our most recent low. This becomes our most recent high. Price continues breaking down, becomes our most recent low and our most recent high. And then price is continuing to break down. So yeah, this is just basically the process that we follow. We want the most recent low and the most recent high to identify our breaking structure. Price continues breaking down again. And then we have our breaking structure. Once we have our breaking structure to the upside, we want to see 3 pushes into the low. So we want to see 1 push, 2 push, 3 pushes into the low. So we have our first push, and then our second push, and then we are looking for our we have the third push. After we have the third push, we are interested in 1, 2, 3 consecutive candles with an engulfment. 3 consecutive candles with an engulfment. All right, so do we have any 3 consecutive candles? No. Price continues breaking out. We've not broken out of this high yet, so we are still in a valid and a solid trade setup. But then we have an engulfment candle after 1, 2, 3, 4, 5, 6 consecutive candles. We have our engulfment candle. That becomes our entry. We had a 10 pips stop loss and a risk reward ratio of 1:2, so around 20 pips. And yeah, that is how the trade played out. So basically you must have a process, and when every trade setup follows the process to the core, execute that trade setup. This is a game of numbers, a game of probabilities, and basically that is why you must stop being cute, because then you are bringing all these variables to the equation that really you can't account for when you are going back to actually look at your trade setup, look at your trade strategy, and look for things that can be repeatable that make the trade setups work. I have a free mentorship program. Link will be in the description. Check it out. If you got value from today's video, subscribe, and I'll see you in the next video. Peace out.